One of the hardest questions in trading isn't always when do I get in, but when on earth do I get out? Well, today we're going to break down a really powerful tool that's designed to answer that exact question. It's called the Fibonacci extension, and I'm going to show you how to use it to spot some clear, logical targets for taking your profits.
So picture this. You absolutely nailed your entry. The trade is deep in profit, it's pushing into brand new highs. It's an amazing feeling, right? But then, that little voice pops into your head, and it starts asking, so where do I actually take my profit? And that uncertainty, man, it can turn a great trade into a super stressful one.
And that right there is the classic trader's dilemma. When there are no obvious landmarks, no old highs or lows to aim for, taking profits can feel like you're just guessing, but it really doesn't have to be that way. The tool we're covering today, the trend-based Fibonacci extension, is built specifically to project logical profit targets out into that open space.
Okay, but before we even start drawing this thing on a chart, we gotta set it up right. A clean setup is absolutely key for clarity, so we're gonna do a quick, one-time tweak to get rid of all the noise and just focus on the levels that actually matter.
Here are 4 super quick settings that'll make your life a whole lot easier. First up, just remove any of the levels you don't use. This instantly cleans up your chart. Second, switch the levels to display as percentages. It's just more intuitive. Third, move those labels over to the right and into the middle so they're not covering up the actual price action. And finally, just bump up the font size and line thickness so you can actually see them clearly. Trust me, this little bit of setup makes a huge difference when you're in a live trade.
All right, our tool is set up and ready to go. Let's get into the core strategy. The very first place that a lot of pros look to start taking some profits is in the zone between the 50% and the 61.8% extension levels. So how do we find it on the chart?
It's a really simple 3-click process. Your first click, which we'll call point A, goes at the very beginning of the big price swing you're looking at. This is what traders call the impulse move. Think of it as the blast-off point that first got your attention.
Next up, for click number 2, you're going to aim for the peak of that impulse move, right at the top just before the price started to pull back. The distance from your point A to this point B, that's basically our measuring stick that the tool is going to use to project targets into the future.
And for the final click, point C, you'll place that at the very bottom of the pullback or the correction. And boom, the moment you click here, that's where the magic happens. The tool instantly projects all the key Fibonacci extension levels right onto your chart, giving you a beautiful roadmap of potential profit zones.
So you might be asking, why this 50% to 62% zone specifically? Well, it really comes down to market psychology. As the quote here says, this is often the first place where the big players, the institutions, are going to start taking some chips off the table. It's just a logical spot for them to lock in some gains, and that's why we so often see the price react right at that level.
Okay, but what happens if the trend is an absolute monster and it just blows right through that first zone? Well, first off, that's a pretty good problem to have, right? We don't panic. We just shift our eyes to the next major target, the 100% extension level.
Yeah, that 100% level, it's a big deal psychologically. It represents something called a measured move. All that means is that the current upswing has traveled the exact same distance as the first one. When you see that kind of perfect symmetry on a chart, well, it gets a lot of people's attention.
Hitting that 100% level is often a major red flag for what we call trend exhaustion. I mean, think about it. After a perfectly symmetrical run, it makes sense that momentum might start to fade. This becomes another critical decision point where lots of traders are looking to get out, and that can easily trigger a deep pullback or sometimes even a full trend reversal. Now, using these Fibonacci levels all by themselves is already pretty powerful. But if you really want to level up your game, you start combining them with other signals. This is a concept called confluence, and it's all about stacking the evidence to find those truly high probability targets. Let's build a case piece by piece. First, we just look at the chart and identify a classic resistance level. In this example, it's a recent swing high. This is just a point on the chart where sellers showed up in force before, so it's a logical place to watch for them to show up again. Okay, that's our first piece of evidence. All right, now let's overlay our Fibonacci extension tool, drawing it just like we learned. And what do you know? Look at that. The 61.8% extension level lines up almost perfectly with that swing high resistance. So now we have a second, totally independent reason to be watching this exact same price. And that is the power of confluence. When a structural level, like a swing high, and a key Fibonacci level line up together,
They create what I like to call a hot zone. The probability of the price having a reaction in this specific area is now way higher than if you were just looking at one of those signals by itself.
Before we wrap this up, I want to leave you with this single most important rule for using this or really any technical tool. Seriously, this is the one thing that separates using it consistently from just, reckless guessing.
And here it is. Fibonacci extensions are a map, not a crystal ball. They show you potential areas where a turn could happen, but they do not guarantee it. You always have to wait for the price itself to confirm that the level is being respected. Look for reversal candles. Look for a break in the momentum. You have to use it as your guide, not a guarantee. Once you add that layer of price action confirmation, you'll transform this tool from just another indicator into a core part of your strategic trading plan.